Hello, good evening, everyone. Hope you all had a good day. Right, we'll just look back at what happened today in the markets and round up the day and look ahead to tomorrow. So when we met this morning, sorry, we didn't meet this morning, but as usual, we checked the economic calendar and we knew that there were reports of high importance due out today. We had the ECB interest rate decision at 12:45 GMT plus 1, and then the US unemployment rate at 1:30 GMT plus 1. So in view of this reports of high importance due out, the plan was just to keep out of the market and not place any trades and just wait till the first report of high importance, which was the ECB interest rate decision at 12:45. So we met at 12:40, 5 minutes just before the report was due to be announced. And when we met, at the time we met, the market was still trending sideways. I'll just show that, make it a bit clearer. Okay, so when we met, the market was still trending sideways between the first resistance, that's the red line up there, and the first support, the green line there. And the pivot point was within the sideways trend. So when we met just before the report was due to be announced, the plan was to place a pending sell order just below the first support and then a pending buy order just above the first resistance. So that was the plan at 12:40, just before the first report of high importance. And then when the interest rate was announced, not much happened in the market, and we discussed that at the time, that there was a possibility that not much would happen because of the next one at 1:30 p.m. GMT, the US unemployment rate, which was a real huge mega report. And as we can see, at exactly 1:30, when the report was announced, the market fell. There was a sharp fall in the market as soon as the report was announced. Unfortunately, because of the huge activity in the market, there was some slippage. So although I had my pending sell order just below the first support, I was actually taken into the trade below the second support. So I was actually taken into the trade 20 pips less than where I planned to enter, but that can happen with trading, especially when there's a period of extreme activity, which is what we had today. So that can happen. So we can see that happened, and I had to then readjust my stop loss to 20 pips below where I entered, and my profit limit to 60 pips below where I entered. So I hope you all did the same. I hope you all readjusted your stops and your profit limits depending on where you entered the market. Because like I said, due to the slippage, we didn't enter at the point where we planned to enter. So you can see I still have my 20 pips stop loss in place and my 60 pips in place. The market did not get to halfway. Again, my plan is that when the market gets halfway towards my target, which is 60 pips, so my target is 60 pips. So once the market gets halfway, which is 30 pips, at that point I move my stop to the opening level. But obviously the market did not get there. And again, we've come to the end of the trading day. And again, it's decision time to decide what to do. And again, if you've got two options, you can either just close your trades, because it's the end of the trading day, you just close your trade out and take whatever profit or loss you have, and then you start again tomorrow. Or you can let your trade run to the next day, which is what I do, and as you've all witnessed me do. I let my trade run to the next day and see what happens. And by the way, my trade has been running since Tuesday, finally got to the 60 pips level, and I took my profit from that trade, and that's why my account is now up to $570. So that trade has been concluded, and it ended up being a profitable trade, but today's trade is still live. So you can either close your trade or leave it to run. Although I'm going to leave my trade to run, I'm going to reduce my risk. I'm going to reduce the risk by 10 pips, so I'll be risking 10 pips, so I'll just reduce that a bit. and then I'll leave it till tomorrow and decide what to do tomorrow. So that's my plan. So I'll just fill out my spreadsheets. Like I said, the other trade ended up with a profit, the trade from Tuesday that's been running. So I'll just put 510 in there. But again, the main thing is that it was a good trading day because I stuck to my trading plan. That's the key to success, is sticking to your plan. And then the other observation is that the market trended sideways prior to the last report of high importance. I've been putting there high importance. It's high importance. Oops. Make that correct. High importance. Let's do it properly. High importance. Not high importance. So high importance. There you go. So again, it was a good trading day today. Not because I made money or lost money or whatever, but because I stuck to my trading plan. Check the economic calendar first. Avoided trading before the report of high importance. Placed my trades at the points of entry I normally use, which is the pivot point strategy. Applied good money management, put my stops and profit limits in place. So again, it's been sticking to my plan. And again, like we've observed already over this week, you can see again the market trended sideways prior to the last report of importance. So again, like I said, that's the importance of making comments. And again, if you're new to trading, you can make as many comments as you want, so that when you reflect on your trading over a couple of months, you can make objective assessments of the markets. And the only way you can make objective assessments is because you've noted and you've been writing things down, so you can go back and reflect objectively. So fill out your spreadsheets. I will look ahead to tomorrow. Tomorrow is a public holiday in America. Tomorrow is Independence Day, 4th of July. So tomorrow is a public holiday, so America will be closed. And as we know, when there's a public holiday, there's a high probability of the markets trending sideways. So in that case, we're going to avoid trading tomorrow because it's a public holiday, but we'll discuss that again in the morning. There's a question here. In trading the Dow Jones, does one apply the same principle, pivot point strategy? And yes. So I apply pivot point strategy to all the trades I place. To all the markets I trade. So yes, even with the Dow Jones, I still use the pivot point strategy trading Dow Jones. So yes, the pivot point strategy, it can be applied to any market, whether you're trading commodities, stocks, any currency pair, indices, and that's why I love the pivot point strategy. You can apply it to any market. And again, this is a new strategy. Like I told you on Monday, that's a new strategy I'm observing and trying to observe over the next couple of months. And the theory I'm looking at to observe is that when the Dow Jones opens at 2:30 p.m. GMT plus 1, that's when it opened, and that's the highest point at opening and the lowest point at opening. And then I'm trying to see what happens. If the market breaks the opening high of the market, does it keep trending up? And if it breaks the opening low of the market, does it keep trending down? So I'm just going to observe this over the next couple of months and see what happens in the majority of cases. So again, that's the way you improve your trading or improve your plan, is to make objective observations, objective assessments, and then you can then see what happens the majority of the time. But yes, going back to your question again, yes, I use the pivot point strategy for all markets I trade. Any other questions, comments? Okay, good. So if there are no more questions, I wish you all a good evening. Like I said, decide what you want to do with your trade. You either close your trade out or let it run till tomorrow like I do, but you can reduce your risk, which I've done. I've reduced it from 20 pips to 10 pips that I'm risking, and we'll see what happens tomorrow. Okay, brilliant. So have a good night, everyone. Take care, sleep well, and we'll speak again tomorrow morning.